Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Amit Kumat, Chief Executive Officer at Pratap Snacks, joining in. Welcome to the show, Amit, and a pleasure to speak to you as always. Amit, my first question coming to you is: last 12 to 18 months have been really difficult for a lot of businesses. Yes, there have been some businesses which have gained, some probably saw that a new way of doing business, a new strategy that evolved for a lot of them. So for a Pratap Snacks as well, how has the transition been in terms of COVID?
Good afternoon. Thanks for giving us the chance, Hiral. Last 18 months or 6 quarters have been extremely bad. Mainly, the reason has been the because of the impulse purchase product what we sell. Most of our sales come from impulse purchase where the kids go outside and eat a 5 rupee pack. So post COVID after March 20, things have started getting down. Things have started improving from last quarter. What we realized basically that our main focus, about 90% of the sales we used to come from a 5 rupee pack, we have to change that so that we can improve considerably in the COVID scenario. Though now the COVID scenario is over, sales have come back to the normalcy now. Right now, we're almost close to the normal sales pre-COVID level, and we think the worst is over. Worst is definitely behind us.
Absolutely. And, due to the festive season also, have you seen demand improving?
So last quarter has been extremely good in terms of the demand pickup, and I
Hmm.
think the demand is definitely picking up. More because of the not because of the festive reason. I think that if the kids goes outside of the home, the demand will definitely pick up.
Right. So overall, another aspect is, did you see a change in strategy in the way of doing business that evolved from Pratap Snacks, which was way different? Did you make any changes on that front?
So there are two things basically what we realized during COVID times. First, as I mentioned, that basically most of our product sales was impulse purchase. So we
Correct.
are planning a big portfolio, definitely a huge portfolio, which can go in a higher MRP product, which can go into A and B class outlet, which can go inside the home and people can eat.
Hmm.
Most of our product are basically people consume on road as of today. So that's a strategy what we are working on, and probably by next quarter we should see some results at that front. Secondly, we realize that it is very difficult for the SRs to go into the market, take order from the retailers and deliver the product. So we are using technology to get the orders from the retailer through calling or through app system, so that one layer can one call can be cut down from the retailer point. Instead of two guys going on the
Hmm.
retail point, one can go and take orders, and that has also worked well for us.
Right. So overall, Amit, what I want to understand from you is the connect between rural and urban. Now, the smaller packs mainly have been in tier two, three, four cities where we see that kind of sales coming in for FMCG companies. For a Pratap Snacks, how has that divide been between urban and rural, especially during COVID? Did that change as well?
So though we don't have the exact number of urban and rural, but
Correct.
we believe that it's almost 50% urban and rural.
Hmm.
And I think people believe that basically most of the 5 rupee sales come from the rural, but that is not the case.
Hmm.
We have a very strong presence in Delhi and Mumbai market, and there also over 90% sales comes from the 5 rupee pack.
Right. So now, when you're saying that you're expanding the portfolio as a learning due to COVID, a change in strategy, will it be the existing products wherein the packet sizes will be increased, the grammage sizes will be increased, or will it be existing products plus additional new products which will be available in bigger packs?
So it's a combination of both. First, existing product with a higher 10, 20, 30 rupees MRP, and probably namkeen with 100 rupees MRP, and a different portfolio segment which people basically consume inside the home. Working on both the things.
Okay. And how does it differ in terms of the margin front? Pricing, yes, it will be as do you decide, but will there be a different in terms of the margins that we get on those packs, or will it be in line with what we're getting
I
in the 5 and 10 rupee?
I think that would be a little bit better than rupees 5 and rupees 10 segment.
So basically, with the launch of these newer SKUs, our margin profile will also better from here on.
Definitely. But you need a better marketing push in that case.
Absolutely. So basically, then your selling, distribution, marketing expenses, at least for the first couple of months, will be higher, which
Right.
will then go down eventually.
Definitely, yes.
Right. And Amit, overall, in terms of where distribution goes, you have started doing direct distribution, cutting one channel in between. So, what is the impact benefit that we are seeing on the business?
So if you see, we had a three-tier model where means we had a super stockist, a distributor,
Hmm.
and who supplies in case to the retailer. We have removed the super stockist at many places. We are trying to remove super stockist across the country, and that has given a huge benefit depending from different place to place, because directly supplying to the distributor from across the country is not that easy. We
Correct.
have been able to done in central and western part to a great extent, trying eastern and southern part probably in next few quarters from now onwards. We believe that with these changes of direct distribution, some product optimization we have done, some process reengineering we have done, I think which can get to a 5 to 6% positive EBITDA from all these efforts.
Right. And overall, in terms of the product portfolio as well, which segments could be growth drivers from here on?
So I think pellets could be a huge growth driver for us. Pellets are the frying business basically. So we have different plants we make frying for us across the country. It's easy to produce and easy to market in those markets. We can directly supply to the distributors. I think pellets should give a big boost for our sales in coming future.
Right. And Amit, another thing is, recently a lot of FMCG conversations have come to an endpoint discussing that it's the small size packets, it's the small size which is actually growing in the FMCG space. Now, you have been in that space. For example, even if you see a cold drink, for example, you have your Jeera soda. There is a 20 rupee bottle which is available, and now they've started targeting the 10 rupee market. Same way, if you talk about, say, I think if I'm not mistaken, Parle, they've launched a 10 rupee packet which is selling some flavored milk. So,
Right.
and you've done this probably, I don't know, since the time way before you, when you started your business. And these
Right.
are the companies which are venturing into the small market now. So, do you think that's a strategy which is something which you should still concentrate on in spite of, launching your bigger packets?
I'm of the firm believer that the rupees 5 packet is going to stay here for many, many more years.
Hmm.
Most of the conversation with our investor, they ask me only one simple question: ये 5 रुपए का पैकेट कब खत्म होगा? मैं बोला, जब तक अपन है जब तक खत्म नहीं होगा. I don't think this is not going to go anywhere. This
Correct.
business will definitely grow, but since basically the inflation is very high, and the A and B class outlet, they don't keep the 5 rupee pack. It is very important for us to get into higher MRP products.
Correct.
But
Correct.
definitely our strategy, main strategy would be around the 5 rupee pack. That
Absolutely,
won't
because
change.
on that front, I've seen a lot of brands who are venturing and trying to figure out that how do we get into that 5 rupee, 10 rupee segment because they are only available in higher MRP products. And that's a strategy which you already have. And when investors ask also, I think that's a very wrong question to come up as to why when that market will close down, because that's something which is really booming right now. And with that, in terms of in-home and out-of-home consumption mix, are you seeing a difference on that front coming up? Because due to COVID, as you also mentioned earlier, in-home consumption did increase, out-of-home consumption was going down. Now, with the bigger packets, do you think you will be able to? I mean, how long will it take for you to penetrate that market according to you?
So I think it's very difficult to give any numbers of the time duration, but I believe that this 10% basically the segment which are above the 5 rupee segment, in next 3 to 4 years time, we should see a 60% sale from the 5 rupee packet and 40% from the bigger packs.
Right. And with this, in terms of say even the raw material prices, I think palm oil is one which would really impact business taking the prices into consideration. Potato is something which impacts your prices as well. So how is the trend looking like in terms of the important raw materials?
So I think all the raw materials are basically on the very high except potato right now. The packaging film is on the higher side because of the petroleum product availability and the cost of crude oil has gone up recently. But the biggest impact has been because of the palmolene.
Hmm.
The palmolene oil, which used to be around 70 rupees for last many, many years, is currently trading at around 120 rupees plus 120 rupees plus. Government has imposed some duty also. It used to be around 35%, which is currently at 25%. So if you see the just negative impact of oil, it would be around 8% negative impact of edible oil from last 2 years to this year.
Right.
So I
So,
don't see the palm oil prices going down considerably from here in very near future.
right. So overall, Amit, what I want to understand from you is whenever raw material prices go up, and when you think that, okay, there is no looking back from here on where normalization will come in, how do you manage to maintain your margins? Is it that a price hike? Because a price hike in terms of MRP products is very difficult on a constant basis. That's number one.
Right,
Only the other option that we have is to reduce the quantity. So is that
right.
a strategy that we constantly follow?
So that's the last strategy we want to follow, reducing the weight.
Hmm.
If you see the 5 to 6% benefit we could get out from the channel and the product optimization, probably only 1% came from the reduction in weight. So how to give more value to the consumer and reduce the channel margin is
Hmm.
our motto basically.
Right. And right now, in terms of capacity utilization, where do we stand?
Around 75 to 80%.
Okay. And we've set up a manufacturing facility in Calcutta as well. So what's the capacity and utilization there?
We have just started, probably it's 1 month back only,
Correct.
running at around 30-40%. We should be up to 75% in next 3 months time.
Okay. And overall, in terms of where Awadh products go, what's the plan to launch them outside Gujarat?
So Awadh had only, if you talk about the total snack food category, there are 4 categories: pellet category, fried pellets, namkeen chips, and then extruded shaped and unshaped extrusion. Awadh was available only into 2 categories: the pellets, that is frams and namkeen. So they had very specialized pellets. Basically, we are taking those pellets outside the Gujarat market, and we have done it successfully in few areas, trying to expand it further. And Awadh as a product, we are trying to go into Maharashtra, MP, and Rajasthan market. It's a twofold strategy.
Hmm.
And unfortunately, we couldn't do much with Awadh in last 2.5 years since we purchased it because of the COVID times.
Hmm.
Now we are trying to get yellow diamond product into Awadh network, mainly
Okay.
our sweet snacks category and the extruded snacks, which are not available in
Hmm.
Awadh as of now.
Right. And very lastly, Amit, in terms of expansion and growth, what is that expected to look like over the next, say, 3 years?
I think if you forget about the COVID, which definitely we have forgotten about, we should get a minimum 15% growth from here onwards, and not looking for much capital investment because we have plants available across the country right now. We have good third party facilities also available. So we are not looking for major capital expansion.
Hmm.
Whatever expansion is required can be done from the internal cash accruals only.
Right. And how much growth are we targeting?
Minimum 15% for next few years.
That's a good number to look at as well from here on. Thank you, Amit, so much for joining us on the show. It's always a pleasure to speak to you, get insights. Again, congratulations on the uptick that you've started to see. Good luck for the coming years as well, and stay safe.
Thank you. Thank you, man. Thank you.
Thank you.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.